And in our top business story, the UAE Central Bank has issued new capital adequacy regulations for all banks operating in the UAE. And that's in line with the revised rules outlined by Basel III. Through the UAE news agency WAM, it was revealed that the new capital adequacy regulations, which became effective on the 1st of February this year, are in line with the revised rules authorised by the Basel Committee on Banking Supervision in Basel III. Central bank officials were quoted saying that the new banking regulations are supported by accompanying standards under the central bank law, and accordingly all UAE banks are required to manage their capital in a prudent manner. The Apex Bank was quoted in a circular saying that new regulations also mean that the corresponding bank's risk exposures are backed by a strong capital base of high quality, in order to contribute to the stability of the financial system here in the UAE. The central bank stated that it seeks to promote the effective and efficient development and function of the banking system, and banks must ensure that these regulations and standards are adhered to, both in terms of meeting the solo level capital adequacy ratio requirements and the group level ratio, based on their capital strength and risk profile, and thorough regulatory consolidation of assets and liabilities of its subsidiaries. Banks are also encouraged to hold buffers of capital above the capital requirements. Business conditions in the UAE's non-oil private sector continued to improve in February this year, with the strongest upturn in output for 1.5 years. That's according to the Emirates NBD UAE Purchasing Managers Index. The survey, sponsored by Emirates NBD and produced by IHS Markit, shows that strong demand conditions and a favourable economic environment encouraged companies to scale up purchasing activity and hire additional workers over the month. On the price front, average selling prices rose for the first time in almost 1.5 years, as firms passed part of their additional cost burdens onto clients. Officials stated that the rise in the UAE PMI to the highest level since September 2015 suggests that demand has strengthened both domestically and abroad, and higher oil prices have likely contributed to improved sentiment and business activity over the last few months. Some of the key findings include sharp and accelerated expansion of new orders, which has boosted output growth. Job creation sustained in February, and output prices rose for the first time since October 2015, up from 55.3 in January to a 17-month high of 56. The latest reading was above its long-run average of 54.5. And continuing with Emirates NBD, the Asset Management Department announced today that it plans to transfer a $314 million portfolio of 7 Dubai properties into a Sharia-compliant real estate trust, which will be floated on the Nasdaq Dubai. The Dubai Bank said that it hoped to raise between $100 million and $125 million from the offer, which it plans to invest in further real estate purchases. The bank said that the 872,518 square foot income-producing portfolio will be transferred to the new Emirates NBD Real Estate Investment Trust from a Jersey-based open-ended real estate fund, which was established in 2005. It said that the Jersey-listed fund raised $35.6 million in rent for the 15-month period to the end of March 2016 and $13.8 million for the 6-month period to the end of September 2016. The bank said that the portfolio currently includes the 28-storey Al Thuraya Tower office in Media City, the 10-storey Bingati Terraces housing complex over in Dubai Silicon Oasis, and the 13-storey Arabian Oryx House housing complex in Barsha Heights. The portfolio also comprises of the mixed-use Burj Daman Tower in the DIFC, a collection of commercial buildings in Dubai Healthcare City, and other residential towers. The UAE has the best developed ecosystem for producing halal pharmaceuticals in terms of supply drivers, governance, awareness, and pricing index. That's according to the latest report. The findings are from the most recent State of Global Islamic Economy report, where Malaysia and Singapore round out the top 3 on the index. It noted that Muslims have been spending at least 286 billion dirhams a year on halal pharmaceuticals. And the multi-billion-dollar industry is expected to expand even further as the UAE-based International Halal Accreditation Forum initiates global standardization efforts. The report found that the top 5 Muslim pharmaceutical markets are Turkey, Saudi Arabia, the US, Indonesia and Algeria, with a total value of 112.7 billion dirhams. Mohammed Salih Badri, the Secretary General of the IHAF, stated that no single entity with a comprehensive international presence has addressed the Sharia compliance needs of the segment. However, the forum is committed in addressing these concerns with the support of various accreditation agencies around the world. He noted that it will also promote awareness of the scientific foundation as well as the health benefits of halal products.